Ideas for Impact, a new podcast where innovation meets sustainability head on. Let's take a fresh look at how we do business. Changemakers are innovating solutions to some of the toughest challenges we face in our world. In the process, they are creating their own mark on industry. Our guests are rebels with a cause. They are tearing down barriers, redefining success, and leaving a mark on their industries. Our guests are the disruptors who refuse to settle for business as usual. Join us to unravel the lessons learned behind their failures and their triumphs and uncover the hidden opportunities for positive change. Co-hosted by me, Joanna Buczkowska-McCumber, and my friend, Deborah Host. The world of investing is changing, expanding into genuine impact. The focus has broadened to encompass investments in, yes, profit-driven ventures, but with an impact focus, social enterprises, cooperatives, and even nonprofits. One of the funds pioneering hybrid models of investment is the Thrive Impact Fund, based in Victoria, Canada. It's a testament to the idea that impact doesn't need to be massive in scale to be profoundly effective. Thrive Impact Fund stands out as a BC benefit company, a fund with a geographical focus that's committed to financing and bolstering enterprises that address pressing social, environmental, and cultural challenges. And in today's episode, we're excited to host Kristi Fairholm Mader, the co-founder, managing director, and mastermind behind the fund. And Kristi isn't just a leader in this field, she's also a dear friend. I'm excited to have her here and to explore how the fund is making a difference, one investment at a time. Welcome, Kristi. It's so good to have you.
Thank you for having me.
Yeah, so let's dive right in. Kristi, can you share the story behind the inception of the Thrive Impact Fund? And tell us about the fund. What makes it different than the traditional funds out there?
Yeah, absolutely. So Thrive Impact Fund is a place-based, focused on BC, impact first fund. And the reason why we developed this fund is because I come from the nonprofit and charitable sector. And I worked my entire life as youth worker, as social enterprise developer in the disability movement and homelessness prevention, a whole lot of issues and ways that the nonprofits are making a difference in communities all over. And I kept noticing, and I would write a lot of grants and I would fundraise, and kept coming up this incredible sector that's doing amazing things is resource impacted. And it tends to not struggle to get the resources to do the work that it needs to do. And there's lots of reasons for that. But we also saw this rise of social enterprise. And I'm not just social enterprise as something separate from a nonprofit, but organizations becoming more enterprising and increasing their earned revenue. And in order to grow, sometimes they would need financing. And when we as nonprofit leaders, because I co-founded Thrive Impact Fund with other nonprofit leaders, went to access financing, we came up against barriers in the system. A lot of traditional financiers ask for collateral. They ask for personal guarantees, which for a nonprofit executive director or volunteer board is difficult to provide, and nor do we think they should provide that. They receive no personal financial benefit from operating those organizations. And so there's barriers, and also traditional finance doesn't seem to understand how nonprofit revenues work and the multiple revenue streams or so on. So we began to look at how can we create a fund that would remove those barriers and create greater access to capital that allows organizations to grow, to build their revenue streams out, to acquire assets, to acquire enterprises. And that's where we started. As the fund began to become conception and grow, we realized that lots of organizations and individuals who are creating impact enterprises are facing similar barriers to capital. So we broadened out beyond incorporation. So we're incorporation agnostic, but we are impact first.
On that note of being impact first, maybe can you give us some examples of the investments that you've made and the types of organizations that you are supporting?
Yeah, absolutely. So when we say impact first, we mean that the purpose of the enterprise is to create and generate social, environmental, or cultural impact. So it's not a side thing it's not a 1% for the planet kind of concept. It's not a corporate social responsibility kind of concept. It's like the business exists to create the change that it's trying to create. So example would be one of our investees is an organization called Water Rangers. They're a charitable nonprofit that is working to create data and citizen-led water testing around the water health in communities. They sell kits. Organizations and individuals and citizens and First Nations and so on can test their water quality in their very own communities. They can upload onto their platform. They can understand the water quality, and then that gives them the tools and the resources to be able to advocate and provide education in order to improve water quality and to take care of their local water sources. So that would be an example of trying to, the purpose of that enterprise is to increase and strengthen and create better water quality across Canada. And so many of our organizations, if you look at our portfolio page, have that impact first out there. And when we assess a deal, the very first thing is we look at is what's their mission statement? What are they trying to do? Who are they trying to do it with? Who are they serving? And all those questions are initial frame. And then we get into what's their finances look like and how do we create the right kind of capital mix in order to help them grow and succeed.
Speaking of capital mix, and can you talk to us a little bit about the scale? So what kind, how much, like funding? I love what you're doing. This makes so much sense, but is it enough? Do you need to be giving more? Like, what are you seeing in that landscape right now?
Yeah, because we are serving nonprofits and charities and cooperatives and for-profit social enterprises, that's who we invest in. We needed to have capital that would be accessible to them. So nonprofits and charities can't take equity, but we would see that equity provides a flexibility and patience that is missing from debt. Debt is a fairly blunt instrument. Its assessment, its risk mitigation it's pretty standard, but it's pretty blunt, and it doesn't often have flexibility that's required, and it's not often patient. The nice thing about debt is it's non-dilutive. What we looked at is how do we make debt act like equity? How do we give it the terms and structures so that it can be patient? And as well as how do we make debt be non-dilutive in a way? So the tools that we use 3 tools, and they're pretty customizable. So we do a bridge financing tool, so short-term lending, and that's because we see a lot of organizations need to bridge towards grants, right? Or need to bridge towards some usually grants or tax credits or a purchase order. So there's a need in there that provides working capital. We do flexible term loans. So we look at a project and we ask, like, what's the interest rate that we want to do based on sort of the risk analysis that we have on a project? And then how do we play with the terms in terms of length of time, interest only, periods, balloon payments, all that kind of stuff, to be able to make term loans. And then the third one that we use is revenue-based financing. And revenue-based financing allows the quasi-equity that allows the debt to follow the revenues. So it's based on payback is based on a percentage to a multiple. Those are the 3 tools that we use. And our process is to really look at what is the overall right mix of all the capital coming in to support a project. And then what's the specific type that we can play that allows us to realize the impact, to understand and mitigate risk and share risk. I mean, that's the nice thing about revenue-based financing is we share the risk, but also provide the patience that many of these organizations need.
That's great, Kristi. I think like on that point in terms of like just the different vehicles you're using in the fund, I'd be curious to also understand, you've talked to us a little bit about how you look at impact, but how are you thinking about scaling impact in particular for these organizations? Are there, specific metrics or methodologies that you're thinking about using to actually understand the impact that you're having through this capital?
Yeah, so not all impact needs to be scaled for it to make a real difference. And so we really look at what is this organization, what is this approach doing in community? And sometimes the scale of their impact is to serve their neighborhood or to serve their community or to provide housing or to, there's lots of different ways. And those projects, we just financed a housing cooperative, a nonprofit housing cooperative that purchased a building. They're doing a community bond raise, which is a really interesting financing tool. And they're going to, build a certain amount of units, right? Under 60 units. That project is not a scalable project. It is in community structure, building infrastructure, providing housing at an affordable basis in a community that badly needs affordable housing. And we think that makes a difference. And same as, others, sometimes we have a small business. We have a workers cooperative. It's one of the first workers cooperative in Western Canada. And they are a circular economy makerspace. And, they're not going to be a scalable model. They're going to provide good employment to their worker cooperative. They're going to provide a good service and reduce waste in terms of textiles and build people's capacity in community. And so the goal around that is that they earn good wages, that they're profitable, that they enjoy their work, and that we're able to, that's kind of like a community wealth building kind of model. Whereas other enterprises that we may support are scalable. They have a product that is set and ready to go. That's, we are looking at seeing products coming into the market that replace toxic products. And so being able to have that kind of replacement, those kinds of products are scalable. And so part of what we do is our goal is to be like, what is your goal? How do you understand and measure success? What's the impact you're trying to achieve? And how do we provide some wraparound supports and additional coaching supports to help you achieve that? But we're not looking for a big exit. Like, our model is not take an impact organization, help them scale, help them sell, and get a big exit. That's not our model, which is a very equity venture model. Our model is, how do we help build strong, sustainable enterprises in our communities?
How did you pivot from a traditional way of thinking around funding and investing in businesses to the scenario that you're describing? Because to me, it would feel foreign to not look at a business in terms of growth and scalability, but to really think of a business in terms of just impact, a short-term product offering that will solve a small community problem. And small, there's different definitions there. I don't want to reduce the significance of what something can offer. But yeah, I'm just curious what or how you got to this place where you're like, this is what we want to do. And maybe it's just a bridge loan. Or can you talk a little bit about how you got to this place?
We don't look at scalability. We look at revenue and profitability. If it's revenue and profitability in a debt product, it covers our investment, right? So we're looking at a good, a fair return on our investment in order to make sure our fund is sustainable and profitable. And there's a whole bunch of different types of projects that can deliver that. I think for us, it's like, I don't know. I think that there's a whole world of small and medium-sized enterprises that are in communities that are traditionally financed by financial institutions, credit unions, and banks, but miss a whole bunch of people because of those barriers that I talked about before. And most of the nonprofits that we work with and charities and co-ops, they're not big organizations. They're $1.5 million organizations annual budget, right? They may be they're not big organizations, and yet the value that they're providing is incredible. So I think it's like, where do you think change takes place? And I think for us, we really think that incredible amount of change and impact takes place at the level of community, takes place in the level of local economies. It takes place at the level of relationship. And when we're in that kind of space, we can lend and invest in a slightly different way versus if you're looking at only investing in a venture lens, or you're looking only for scalability, or you're looking for that exit, then the metrics of what you invest in become really different. And we think that those kind of metrics might work for some organizations and enterprises, but I don't think there's a panacea of one thing's going to make a difference. We need many people doing many things at many different levels to create the change we need in the world. And so our space where we saw getting missed was at the impact first space and at all different levels, but with the ability to generate revenue, achieve profitability, and increase impact.
That's great, Kristi. And I know and Deborah, I'll let you jump in there in a second, but I know having been in sort of these nexuses of spaces with the startup world, investment world, often get sucked into that, I would say the bubble that this is the only way to do things, right? And I think it's super interesting that Thrive is demonstrating different ways to fund impact, but then also not the types of impact, but the types of vehicles that have the potential for being invested in different ways. And I think that's, really paving the way for hopefully others to come in and support these types of organizations that have, like you say, have often been excluded from the conversation.
Yeah. And I think back to some of the examples that you've shared, is there an example that you'd be willing to share where it didn't go as planned, where things took a turn south. And when it comes to impact and the type of work that you're doing, it's so challenging as well as fulfilling. And do you have an example of something that maybe didn't go as planned, but did what it needed to do in that point in time?
Yeah, our portfolio is pretty steady. It's, because again, with a debt product, they have to have revenue, right? You have to be able to assess the revenue. So you have to have some sort of track record and you have to have a pro forma forward. And so that tends to be pretty steady and tractable. And then it's about fitting and removing barriers. And so so we're not seed investors, we're not early stage. They have to have some product market fit in order to come into our fund. We are first capitalization, so we tend to be often the first time organizations get financing. I would say that our portfolio, because of that, tends to be mostly steady performers. I'd say one that was different that we didn't anticipate is we invested in an acquisition of a business, and it was a really great business. It was run by an already existing social enterprise, and they wanted to expand. They acquired another for-profit social enterprise, and it was very, very successful. And we put in a revenue-based financing agreement that was supposed to be a 5 to 7 year agreement, and they ended up exiting within 6 months. So that was unexpected because a revenue-based financing, is quasi-equity, but it is debt. And so what that meant is that our agreement was supposed to be a long-term patient agreement, all of a sudden became a short-term loan, and it wasn't built to be a short-term loan. So we had to really kind of had to figure out an exit when you have a switch from one kind of intention into another. And so some of those things are around, like, the tools can act that way, but if circumstances change, then you have to be willing to adapt and shift and change with it. And sometimes those things come really fast. So as a new fund, we've had to do a lot of learning around the tools and what's the best way to apply them. And that does take quite a lot of, like, figuring out. And yet we're 2 years into it, or 2.5 years into it. So that first, 2 years provided a lot of learning, but we didn't expect that. We didn't expect that we would have that kind of exit. And the entrepreneur's gone on to do great things. Like, it was a positive exit in terms of where they were going, and they got good investment and they've continued to grow. But it was definitely, like, for us, it takes a long time for us to invest in someone. It takes a long time. We invest for that long term. And so to have that kind of switch around timeframes, equity is set up to do that, whereas debt, it gets a little bit more tricky. So again, we're trying to bend around corners, to not in every way that's legal, but to make these tools work in a different way. And so sometimes that stretch and that unusuality, that difference creates some complexity. And so we have to always kind of be okay to be in that complexity and to lean into relationship when it feels like we need to navigate those things.
You've brought up this point around being adaptive. And I feel like that's so critical, especially in the first few years of starting something. And that kind of makes me want to ask more questions about you and what sort of inspires you to keep doing what you're doing. What's taken you to this place where you're working amongst a peer group, colleagues that are pushing the envelope when it comes to impact work and funding models. So how do you tell me, because then I want to copy this, but, like, how do you stay motivated? How do you stay inspired to keep doing this hard work?
I think it is hard work, like working in the space of social change, environmental change in our world right now feels hard because for me, it always feels like we're not getting there quick enough, fast enough, big enough. And we are in the impact investing world. It's pretty new in Canada. And so we're trying to prove models and create change, often against a system that has been very strongly developed for good reasons. But that system, I encounter this when I'm like, I want my intention to do this, but then the system, the legal aspect of the system around financing and securities and so on says I can only do this. So I feel that tension in there around what we're trying to do at the investor level and then the system that we're encountering. And so until we prove those models at the investor level, we don't have enough to be able to create the systems change that allows, I was going to say, like, little funds like ours to become much bigger, stronger, better. And we are a little fund. And so I do feel that pressure of like to prove our concept, to get solid, to grow quickly in a time that I feel like change is needed very, very quickly. So luckily, I am an extreme optimist, and I always have been. And so I'd say it's like my superpower. I'm always like, we can do it, and optimism. And so and also we work with amazing people, right? When we invest in an organization and we see these entrepreneurs like laying it out to make things happen. We work with organizations, we work with over like about 150 organizations annually, not just through Thrive Impact Fund, but through our parent organization, Scale Collaborative. And we see people doing amazing stuff all the time. And so to get to be in a position where we are able to help support and resource that and see people just have a bit of ease and be able to be seen for the work that they do is incredibly rewarding. So, some of my greatest joys is we have a monthly peer group where we bring together all of our investees into a peer group and we just ask, how's it going? And they have a conversation. And every time I walk out of that, I'm like thankful for the work that I get to do and feel incredibly lucky to get to do this work. And so I think that's always the gift, I think, that I get in my work is not only the people I get to work with, but also my colleagues who are also doing amazing stuff. Like it is everyone's feeling, I think, pretty driven and feeling the imperative, and also tends to be really supportive of each other. So, it's about people, right? It's about good relationships and being inspired and stepping into it together. So mostly I feel lucky.
Very inspiring. And especially in the light of, like Deborah said, this work can be really hard and challenging and overwhelming doing it day in and day out. I'd love to sort of dive into that piece of challenge of like with the fund in particular and your experience building the fund from the very beginning. What do you feel was like some of the biggest challenges that you had to overcome, maybe personally or maybe sort of in the ecosystem, to get a Thrive Impact Fund built?
I mean, our challenge is that we're doing something really different, right? So Thrive Impact Fund is set up in a way that we accept equity and then we deploy it as debt. So our fund has different share classes. Our share classes are blended. So we have like a gift share class. We have a different kind of structure. And so to create something, we looked at, what is it that we want to try to do in community and how do we back out of that to create an organization that we think could then do that, as well as be caring. I'm going to say be caring of Thrive Impact Fund because we're catalytic investor. We bring in capital that carries some risk, doesn't have a huge amount of reward because it's a debt fund. We're never going to get a 10x return. And so we had to create something that allowed the fund and our investors to come into the fund to come in with a deep values alignment. So creating something different has been interesting. I find that most people are curious and interested about that we look different. But it took a lot of work to get there. It took a year of just constructing like our shareholder agreement and thinking through all the models and trying to run scenarios of models. And so that was challenging in developing it. I haven't found raising capital to be that challenging, mostly because we've landed in a really great time in Canada where the Social Finance Fund has been launched. We are part of funds where that the Social Finance Fund is targeting. And so we have just managed to be in a really kind of good time in Canadian impact investing, which I feel thankful for, but also at a time where organizations like foundations and credit unions and all those values aligned folks, family offices, are also really thinking about what their money's doing in the world. And so we provide a solution to them around that. So I'm going to say, knock on wood, like we still have about $2 million to raise in our fund. But so far it's been a lot of values alignment to match around that, even though we look different. And yeah, I think that's
timing can be everything. Oh, Deborah, go on.
No, I like you say this social finance fund in Canada, and I think for myself and our listeners that aren't in Canada, maybe not as familiar with this fund, what are you talking about? Can you
Yeah, so in 2015, I just want to talk about how long it takes sometimes these things to happen. 2015, there was a recommendation to have a $750 million social finance fund that specifically invests in social purpose organizations. And that fund chose its wholesalers. There's 3 wholesalers in the country that are responsible by the government of Canada to disperse and deploy those funds into a whole bunch of different impact funds and investments. And the money has started to roll out just last fall. So that's happening. So it's seeding many of the funds that have been doing this work for a while. And it also not only seeded that, but began to flag again to those other types of investors that are values aligned that, okay, folks, like the time is now to start thinking about where your money is going and what your money is doing in the world. And there's not a lot of options for institutional investors in particular to put their money to work in community. Thrive Impact Fund is one of the very, very few BC focused funds. It's very difficult for them to a lot of those kinds of institutional investors don't want to put their money in venture funds. They're looking at more like steady performers, getting dividends, having some certainty around what they're investing in, some sort of liquidity. Like those things are important. And again, there aren't that many types of funds like that around in Canada. And so having kind of those forces of a bit of an impetus from the government of Canada, a change in kind of those questions about what money is doing in the world, as well as Thrive providing, we designed our fund to not only invest in the kind of organizations we want to, but also to provide an opportunity for those values aligned investors to invest into Thrive. And so that kind of combination of things has made Thrive, I'm going to say, possible. Tons of learning, but I think if we had done this 5 years prior, it would have been a lot harder. So, and it's still hard. Still hard to start a small fund, right? Small funds are not economically, the economies of scale are very difficult in a small fund, but we've managed to A, make it this far, and B, kind of land at this right place in Canada.
I mean, that helps. I have obviously heard of this being in the space, but I think it's just really important to lay out what this fund is, especially in the Canadian environment. Looking at like what's next, what do you see the Thrive Impact Fund evolving in a different way in the next 5 years or staying its course? What's next?
I mean, what's next for us is to close our round, close our fund at $10 million and have an evergreen fund that does the specific thing. We do first capitalization, early stage investing, impact first organizations. And we think that $10 million is kind of what fills the gap in BC. And then our goal is to make our fund be profitable, be able to grow it to a place where we can offer more liquidity to investors so that investors don't need to come in for, right now, investment term is for 7 years, to be able to get big enough that we can offer a little bit more liquidity so people can come in, invest for a couple of years, come out, like build some of that proof of concept out further. And then I think that we would like to partner with other funds across Canada, like we are, that are doing place-based investing, and say, like, how do we create the ability to hold our mandate and our missions in community to do place-based impact first investing, but then to be able to collectively across the country look at a meta place-based fund. So that would allow us to do what we do really well, but also find ways for us to find scale together. So I'm really interested in exploring that kind of approach.
That's really exciting. Just like this meta perspective of like what you can do across the country. And so our final question, what advice would you give to others, maybe in the investment space, maybe others that want to use finance or capital as a tool to embracing impact?
So if you're a capital holder, if you have wealth and you're wanting to deploy your wealth to make change, I would give advice to do things like look for funds that are run and operated by women, look for funds that are run and operated by racialized individuals. People who face barriers in receiving capital are often folks that are facing huge barriers in terms of their work to deploy capital. And so lean into and invest in funds that are owned and operated for that by folks that face barriers to capital generally. And that's a significant amount of capital does not go to women or racialized individuals. So that would be really thoughtful about, also be willing to blend your capital. Be willing to say, like, how can I provide grants alongside flexible patient, alongside equity, and to think about your capital across the spectrum, to be willing to, if you have if you have a lot of capital, to understand like maybe you have enough, and maybe you can think about what's the enough part and how you mobilize other dollars in a way that goes deep into change, and to hold that place of like impact return and financial return together, but also separate, and to allow potentially impact to come first. I think that our world is in an imperative state. I think that the change that we need to create is now and fast, and so on. And people and organizations that have access to financial resources, by changing the way that those financial resources are invested and the way that they flow, I think is one of the fastest, quickest, most impactful way that we can change the trajectory of our planet.
Thank you so much, Kristi. This has been so great. Thanks for coming on.
Thank you for having me.
As we wrap up today's episode, we hope you're leaving with some insights, inspiration, and perhaps a spark of an idea. At the core of every story we cover lies the undeniable truth. What truly drives impact is the relentless pursuit of change, paired with a deep commitment to the greater good. We're always reminded that making a mark on the world is not easy, and isn't just about breaking through barriers. It's about thinking differently about what impact means in our world and what is possible in creating it. Thank you for joining us on Ideas for Impact, where rebels with a cause redefine the meaning of what is possible. For more episodes that challenge the norm, follow us wherever you listen to podcasts. And if you're interested, dive deeper into our journey at ideasforimpact.ca. Until next time, friends, keep pushing the boundaries of what is possible.